Stocks are mixed for the day. Bonds and gold are up just a little bit, not too much. Gold is up 0.30%, bonds up 0.10%. And when we say stocks are mixed, the NASDAQ 100 down just barely 0.02%. S&P 500 up 0.23%. So far, 3 days into a 5-day candle. Remember, the weekly candle is a 5-day candle. And what we see going on is we see, a decent up movement. We may be going into actually the second week of some decent up movement after things bottomed out really back on the week ending Friday, the 28th of December. And we see the derivative oscillator's been losing momentum for the last 4 weeks since things bottomed out. And we see the price percent oscillator heading up. Don't think it's going to cross over unless there's some heady days for the next 2 days. If so, it could cross over, but I'm not thinking that's probably going to happen. We look at the 2-day chart where we've now got the first day of the latest 2-day candle pushing right up on the weekly trend line, the gold weekly trend line. Remember, back on the 9th, we had the 2-day candle ending on Wednesday the 9th, and that was a vertical crossover, and we've marked that with the blue vertical crossover line. So that means we don't have a trade right now. We can't because the weekly's still in a confirmed down move, the 2 days in a confirmed up move. Derivative oscillator gaining upward momentum, price percent oscillators heading up. Take a look at that 4-hour chart. What do we see? We see it up in the morning and really just sort of hanging about the same in the afternoon on Wednesday. And we really see sort of not laminated, but pretty darn close together, the red signal line and the price percent oscillator. Derivative oscillator gained a little bit of momentum in the afternoon, but again, just sort of hanging there together. We'll just wait and see if indeed will this weekly trend line be a bit of a ceiling for the market, and will it roll over heading down after that? Don't know. Just don't know. We'll just continue to watch. Remember, that's what we are as trend followers. We're not forecasters. I can't tell you what the market's going to do. Anybody who says that, it is what, a wizard? I mean, do they have a crystal ball? No, nobody knows what it's going to do. That's why we trend follow. And that's why we have the rules we have. We have to make sure that both our weekly and our 2-day charts are in the same direction. And then once there is a pullback, that is a move in the opposite direction on the 4-hour chart, and it corrects over to the same direction as the weekly and the 2-day, we jump in. Otherwise, the only other method we have of jumping in is when there's a weekly vertical crossover. And I'm actually going to attach some training to the end of the video today. You can also find it at the website and the YouTube channel about crossovers. We have 2 great trainings on that, so you can understand that a little better. If you haven't purchased the book, hey, they're explained very well in our book, Charting Your Way to Wealth. You'll see a link in the show notes to buy the book. And also, if you want to be a Patreon sponsor, that mid-level of Patreon sponsorship, you get a book for free. So again, appreciate your help and support. We do all of this for you for free. We do have to charge for the book, and we appreciate the Patreon sponsorship. So that's where we are on the S&P 500. We'll keep pushing through these other charts. Let's look at the Qs. Said it was down 0.02% for the day, but we have a second weekly up candle that appears to be forming. Nice looking candles, well pushed through that weekly trend line on the Qs. Derivative oscillator looks like it's getting close to going green. Price percent oscillator getting closer and closer to that red signal line. Will it cross over by the end of the week? I don't know. Just don't know. We look at the 2-day chart, first day of the latest 2-day candle, derivative oscillator gaining momentum, price percent oscillator heading up, green open box candle. It's now pushing that 200 average line. Will it push through it? Well, let's see. See if it becomes a ceiling or if things push through it. If so, that would be a good sign for continued up movement. So we're going to go from the 2-day now to the 4-hour, and we see up movement in the morning, little bit of a peel back in the afternoon on the Heiken Ashi candlesticks, derivative oscillators heading down a little bit. Gaining momentum. That price percent oscillator looks like it's pairing off and maybe at least flat, if not heading down a little bit, getting closer and closer to that red signal line. We'll see if things are petering out slowly but surely on the NASDAQ 100. Don't know yet. We'll continue to watch and see. and keep you posted. Let's go to 20-year bonds, up 0.10% for the day. Now, 20-year bonds is interesting because what happened was we had weeks of up movement, and then the prior week ending the 11th of January was a red open box, meaning things slowing down, not strong down movement like we see with a solid red, but a warning. And of course, we saw that warning come to fruition as the week opened. Now up a little bit for the day on Wednesday, but still a down candle and a decent kind of down candle. It has a wick on the bottom and it's solid red. Now it's not a huge down candle like we saw back on the week ending Friday, the 5th of October, but again, it is forming as a down candle derivative oscillator losing momentum. Price percent oscillator not heading down yet, but losing some momentum. But again, keep in mind that the weekly and the weekly is still in a confirmed up move. Now we go to the 2-day chart, and what do we see? Well, of course, it crossed over going down back on Tuesday, the 15th, just the prior day. And we are forming so far now it's just the first day of this latest 2-day candle, so we've got 6-7 days of down movement, derivative oscillator gaining momentum, price percent oscillator heading down. And we look at that 4-hour chart, what do we see there? Well, derivative oscillator still losing downward momentum, price percent oscillator is softening. We saw down movement in the morning and then a bit of a recovery in the afternoon. So we'll continue to watch and see what we see. Don't have a trade right now because of the fact that the weekly and the 2-day are moving in opposite directions. But we'll continue to watch and see what we see when things set up properly. We'll let you know. Lastly, we go to gold. Let's go to the weekly chart on gold. Of course, gold crossed over going up all the way back on the week ending the 5th of October. Up for 3 weeks after that, sort of down and sideways for about 5 weeks, and then started taking off, moving up back on the week ending the 7th of December, and still has a green up candle. Price movements just above that weekly trend line. Derivative oscillator gaining momentum. Price percent oscillator heading up. Candle's not super strong because it still hasn't peaked where it had peaked in the prior week. As we just look at the wick on top of the prior week, we go from the weekly to the 2-day, and that's where we see some of that stunting. We see that 2-day candle ending the 3rd of January was a strong candle with a long wick on top, and we still haven't hit that mark yet. That, of course, is shown by the weakening oscillation in the derivative oscillator and the price percent oscillator, both losing momentum, even though the candles, the last 4 candles representing, of course, 6 days of movement, 2, 2, 2, and 1, just the first day of this latest candle. So we've got 7 days of movement reflected there. And again, moving up, but not super strong. So again, could be getting closer to a crossover going down. Now let's look deeply at that 4-hour chart. That's what we got to pay attention to. And as we see on that 4-hour chart, we get a little bit well, we can see that things are just about recovered as far as the 4-hour chart goes. We get a little bit different picture. The price percent oscillator is flat, but again is not as low as it had been over the course of the prior day, and the derivative oscillator is losing downward momentum. Keep your eye on the 4-hour chart. If it crosses over, particularly crosses over strongly, be ready to pull the trigger on a practice trade. Maybe gold will take off again for us. We'll wait and see what we see. We'll let the charts lead us. Don't forget, try to fill out every day your daily market worksheet. At least once a week, fill out that weekly market worksheet. And every time you do a practice trade, whether you're doing practice trades on the 4 ETFs that we follow, or you're using what we teach to practice trade other ETFs or stocks or other things that you can track with a chart, I encourage you to use that trade worksheet because it will help you put down what you're thinking and why, and keep up with what you're thinking throughout the trade, and then help you analyze what you did right, what you did wrong. If you want to supercharge your training, that's what you do, my friends. And you also take all of our different trainings. We've got lots of great videos, and you become a Patreon member and you buy the book. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.